doing business in Africa. You can't afford to be without Africa Investor.
And Peter, yeah, I always remember how simple you made it when I asked you, how did you get the 6 Danish pension funds to invest $1 billion into a transport fund for Africa? And you said something about, I took my trustees on a plane, or they got on a plane and went to Africa. You've got to see the market. I mean, you're going to put consultancies and consultants out of work with that simplicity. But anyway, love to hear your views on the same subject.
Yes, one of my views when I was a CEO at PKA was never use a consultant.
Oh.
I know things are different in many other places of the world, but I made study trips with my boards, and that convinced them in many cases much more than a lot of reports from consultants. Now, coming back to the issue, I'm here representing a group of investors together with the Nordic governments that have worked to make commitments towards 2050. And last year in Glasgow, the commitment was to invest $130 billion in the green area. The specific thing about this initiative is that this is for the short term to 2030, and we also have the reporting from the investors on how much they actually have invested. And tomorrow we are going to announce, at least for the Danish investors, where we have the precise numbers, but we have also heard from some of the other investors. And the good story is actually that they have invested, so that if they keep on investing like that, they will reach the 130 billion, and I think they will even invest more in 2030. So we are on track. Of course, the turbulence we have seen in the financial market have done that it's not a direct line. We will have to make some curves, but I'm quite sure we'll be there. If we look at the emerging markets, we don't have the precise numbers, but it seems like they have also continued investing in emerging markets. The problem is they have not invested enough, and so they have to bring up the number that's actually invested in the emerging market. And if I look at the emerging markets, Africa is one of the places where they have invested least. So we still have the problem, and we still have to work with it. I think what we have heard from the other speakers, I won't take up the same thing. I agree, but to be practical, and that's built upon that. The organization where I used to work, PKA, and the contacts I still have, is based upon investments in the last 5 or 6 years in the emerging markets. So we both have good cases and we have bad cases. And then what I think especially the MDBs could do was to have a better dialogue with the investors. I know many investors have dialogues with their governments, but we need more dialogues with investors and between investors and MDBs. But also the investors have to come forward and take and bring that dialogue together, because one of the things, and here I start with the investor side, is if you really want to go into emerging market and green deals, you have to get the competences on board, or you have to buy it. And too many pension funds are not there yet. Some of the large ones and some of the big ones have done it, but the other ones have to do it. Then I think actually there's also in some cases a crowd out and not a crowd in. If we take all the good projects, then actually you could in some cases say, why should the development banks be there if not for crowding in private capital? They should take the more risky projects and then crowd in capital in the less risky projects. So we have to develop some kind of working relation between private investors and development banks on who is working where. And the other thing I would mention was actually, I think we need both blended capital instruments, and we need guarantees. But we should also be aware that we could have too many, that each country and each development bank develops his or her kind of institute, a way of doing it. It becomes too complicated if you're a small investor, but also for large investors. So working together, get fewer programs or get fewer ways of doing it is where we are today, because we have tried, we have had successes, but not enough.
Peter, I want to stay with you because we're just going to come back and just have this sort of last round, and it's the very controversial thing, the thing that some of us think and other of us don't say. There's a key issue, which is in terms of private capital mobilization, the ratios that the MDBs deliver are extremely poor. If they were to be reviewed within a private institution, you probably wouldn't hire that institution again. You probably wouldn't hire that client again. Are we trying hard to keep them relevant and perhaps propping them up as a consequence? Or should we be thinking about putting out that same mandate about what we actually require into the private market? I know it's a bit controversial, and let us all end on that. So perhaps let's come back this way, if you like. Is there room for both in the market? Maybe should we, to keep each other honest?
I think there's room for both. And I also think there's room for, and the first one have started, there's room for renewable investor groups, private equity groups working in this market and specializing in this market. But there also have to be some dividends of work. As I mentioned, the development banks have to take the more risky projects and work with them. And they have to, but we also have heard, they also have to take care of the development of new products together with governments. You can't do that as a private investor. I think we have to have much more private investments and by that maturing the market. But we are not yet nearly where we are in the developed world where you just can say the private sector will drive this and take over. We were in the same situation in the developed market in the green sector 5, 6 or 7 years ago, but it took nearly 10 years to get really a genuine market all over the developed world.
Thank you very much. Over to you, Faith.
Yeah, no, quite a controversial question. I think
you didn't have any dinners planned with the World Bank this evening, did you?
No, so I'm going to go with Peter and go a place for both. I think where we know that investing in emerging markets requires deep expertise, and I think that's one of the points that Marc-André picked up there about access to that and really supporting investors in doing that. And that's where the development banks really could have that role. They've got feet on the ground, they understand the communities in which they operate, they need to leverage that expertise. They also need to respect the expertise, I'd say more from my experiences with talking to development banks, of the investor community and the expertise that we have. And I think it's that collaboration and cooperation together and making the best of those skill sets that we respectively have. And so therefore a place for both. Respect needs to be mutual from both, and see how we can really mobilize this action. Because, I mean, it comes to the end of the day, I mean, we are talking about, we need a lot of capital to flow. I mean, as you said, the numbers are absolutely huge, so we've got to get a wiggle on. So we can't just keep sort of having this sort of going round in circles. There has to be some breakthroughs there.
Absolutely. Thank you.
I would say that MDBs have a unique role for counter-cyclical times. So we need the MDBs for that, because nobody else plays that role when the world really goes bad, when everyone is hurting. However, it is true that over the years, when I was at the World Bank, every dollar that the World Bank spent leveraged $10 from the private sector. Now it's about 10 cents. So it has flipped dramatically. And the reasons are multiple, but one of them, and I think this is where the partnership comes in, I think the MDBs do the best job in preparing the ESG components of investment projects. So the private sector could benefit a great deal by getting those, and that's one of our recommendations, to have the World Bank and other MDBs prepare those projects, handle all the ESG issues, which are very complex. They need government intervention, community engagement. They are long-term. They have to take risk, as Peter has said. But then they can offload those portfolios to the private sector. We've done 2 at the African Development Bank already, one while I was there, and another one recently, where private investors were able to take a portfolio from the African Development Bank and handle it from then on. So I think there's an opportunity for partnership there, and institutional investors can do a lot with it. But the third aspect, I believe, is by using what only the MDBs have, which is called preferred creditor status, because the MDBs have a unique situation with the governments with whom they work. There's not a government that ever defaults to an MDB, but they default to the private sector. So you can use that preferred creditor status as a value to generate more room on the balance sheets of the MDBs. And in the studies that we did for this independent report, we found that the difference between an MDB's risk outturn on a portfolio and a private sector outturn for the exact same country, if you look at the bond markets, for instance, is 14-fold, which means the MDBs have a risk lower by 14 times for the same country than a private investor. So that is a value that could be brought in this partnership, I think, doing what Peter and Beth were suggesting we do.
Thank you. Great points, Franny. And those 2 examples that you gave in terms of the African Development Bank, the room to run, $1.2 billion securitization, what was it that made the difference in terms of the institutional investors coming in? Access to gems.
Access to gems.
Access to gems, case in point. And so we just close off with you, bookend with you, Marc-Andre.
Hubert, I just want to say,
agree with all the above?
I agree with everything that was said. One thing there's a role for everyone in this. And we have to recognize that institutional capital, like pension funds, like the one I represent, have a different tolerance to risk than an MDB can do. We all have a role. The problem that is now that we all need to realize is that MDBs are very small. We need to make sure that their capital is as leveraged as much as possible, is used for really what they should be used for, and that actually we develop tools and mechanisms to get the institutional capital in. I always say there's been a revolution in the last 70 years, 3 revolutions: globalization, technology, and who owns and who controls capital. And it's institutional investors like me who controls more or less half of all of the investable capital in the world. Yet, there's no mechanism, no tool, nothing that is catering to us to actually invest where the risk-return equation is not right for our to meet our fiduciary obligation. And that's the thinking that needs to change in all of this debate. It's not one to the exclusion of the other. It's actually, this is 2022 and soon 2023. And it's urgent that we all act together.
Thank you. And with those strong words, please join me in thanking Peter, Faith, Franny, and Marc for those excellent contributions. Wonderful. Thank you very much.
Doing business in Africa. You can't afford to be without Africa Investor.